Housing is a basic human need, but for over 70% of the world's population, the choices for housing are scarce and largely informal. In Africa, the second most populated continent, the need is massive.
In Sub-Saharan Africa, for example, only 3% of the population can afford mortgages.
Traditionally, low-income people in Africa build homes gradually as their minimal resources allow. Habitat's Terwilliger Center has pioneered microfinance loans for housing, small, non-mortgage-backed loans over short periods of time. The loans are matched to the income levels of the households.
The first response of some financial institutions when they hear about housing microfinance is a hesitation at times, and I think that is natural.
Commercial banks did not serve this market because they were considered very risky.
The options that they had were to save or to ask for a loan for business, but divert it to housing.
There is clear need for financial products that support clients in building and improving their homes.
There was a need that was being expressed out there, a need that we really were not very sure how to be able to address.
So Habitat for Humanity created the Terwilliger Center to respond to those market needs through advisory services that are provided in the field to different institutions that are already working or have the potential to work with the low-income population Habitat for Humanity is trying to serve.
In Kenya and Uganda, 6 financial institutions have been supported to develop housing microfinance products under the project Building Assets, Unlocking Access, implemented in partnership with the MasterCard Foundation.
At the client level, they had to go outside there and learn the needs and preferences and capacities of the clients.
We did a lot of research, we talked to the clients, we came up with pilots, we tested different models.
When Habitat came on board, they taught our staff the different types of products, and the really great thing about Habitat was that it was coming in to say, these are microfinance clients. They're not going to afford a huge house, but it will be incremental.
Habitat was able to provide the skills that we really didn't have.
Bangamba waliyo loan y'okuzimba ko nze kanzire ku y'okuzimba nenzira ku y'okuzimba najjayo emirundi 3 mbubiri kitundu ne mbusasulira omwaka buli mwaka njjayo buli kitundu emitwalo 25.
We go back to the sites and monitor the loans maybe after a period of 3 months and see if they used it for the right purpose.
Throughout the project, the housing microfinance loans have supported 58,000 individual clients and improved the lives of nearly 300,000 individuals in Kenya and Uganda. In the next 5 years, these numbers have the potential to double. Recent research by the Terwilliger Center has shown that housing-specific microfinance is outperforming more general microfinance products. Nearly half of financial institutions find it more profitable than their other microfinance products. Housing microfinance attracts new clients for financial institutions. They are often a source of repeat business, taking incremental loans or additional finance products. More than 50% of institutions expect a return on investment in 1 to 3 years.
We see a constant need, and we see that this being an area of growth, and we're not complaining because this gives us bankable assets.
Housing microfinance is helping overcome the lack of affordable finance for low-income households. The need in Africa is huge, but so are the opportunities. Housing microfinance is profitable and attracts new clients who consume additional services.
It helps us boost even the other products because we end up selling different products alongside the construction loan.
The growth in portfolio that we had, 2/3 of that was out of microfinance housing.
Housing microfinance is proving to be essential to low-income people in Africa and equally essential to the financial institutions that embrace it.